Good day, everyone. Thank you for joining AnyMind Group Inc.'s financial results presentation for the second quarter of fiscal year 2024. I'm Kosuke Sogo, CEO and Representative Director of AnyMind Group. I'd like to start with a summary of our performance. In the second quarter of 2024, we continued the strong growth momentum from first quarter, achieving impressive year-on-year increases of 55% in revenue and 50% in gross profit. Regarding profitability, we've seen significant year-on-year improvements across all metrics. Our operating profit reached 615 million yen, adjusted EBITDA stood at 968 million yen, and net income came in at 485 million yen. I'll provide more details later in the presentation. Furthermore, reflecting our strong performance in the first half of the year, we've revised our full-year forecasts upward for revenue, gross profit, and all profit indicators. Here are the contents for our earnings material. Let me start with the market conditions. AnyMind Group was founded in Singapore in 2016 and currently operates in 15 countries and regions, primarily in Asia. So let me first explain the Asian market environment and our positioning within it. The Asian market offers tremendous long-term growth potential. The countries where we operate represent a population of over 3.7 billion people, characterized by a young average age and high internet penetration rates. The growth in both macroeconomic indicators and the internet market presents significant business opportunities. However, the Asian market is also complex. Business environments are fragmented due to differences in language, culture, business practices, and regulations across countries. This complexity makes it essential, yet challenging, for many companies expanding into the region to secure local expertise and partnerships in each country. There are two key characteristics of the Asian market that shape our strategy. One, the difficulty in penetrating the market with a pure SaaS model. Many local companies are cautious about adopting new software and face challenges in post-implementation operations. Two, the local companies often lacking advanced technology, relying on operation-centric solutions or business process outsourcing. As a result, many businesses in the region have been slow to leverage technology and data effectively. To address these challenges, we've developed a unique approach we call the BPaaS, Business Process as a Service solution. This model combines both technology and operational support. Our BPaaS model offers three key advantages. One, by handling operations, we enable clients to maximize the use of technology regardless of their internal capabilities. Two, clients can achieve business visibility through real-time data utilization and monitoring via our products. Three, we continually support the adoption of the latest technologies, including DX and AI, enhancing our clients' competitiveness. I'd like to highlight the organizational and business foundations we've built in Asia since our inception. There are still few companies in Asia, particularly in Southeast Asia, that have achieved both global growth and profitability. We believe our global network, multinational and open corporate culture, and credibility as a listed company give us a unique position in the market. This positioning has positively impacted our current business activities, including discussions with potential partners for business collaborations and M&A, as well as our recruitment efforts across various countries. We aim to further strengthen our first-mover advantage while ensuring steady growth. Now, let's move on to our financial performance. This slide summarizes our consolidated financial results. For the second quarter of FY 2024, we achieved revenue of 12 billion yen, a 55% year-on-year increase, and gross profit of 4.5 billion yen, a 50% year-on-year increase. This represents strong growth that significantly outpaces our initial full-year forecast of 30% growth in gross profit, which was disclosed in February. Regarding year-on-year growth rates, it's worth noting that the yen has weakened compared to the previous year in second quarter. We estimate that currency fluctuations have contributed approximately 5.2% to the increase in gross profit. Operating profit has also improved substantially from second quarter last year, reaching 615 million yen, reflecting steady progress in profitability enhancement. This slide outlines our progress against our initial full-year forecast announced at the beginning of the fiscal year. Both revenue and gross profit are progressing ahead of plan. In addition to the revenue outperformance, we're seeing improvements in productivity, resulting in operating profit significantly exceeding our initial expectations. The operating profit margin for the first half reached 4.3%, compared to our initial forecast of 2.7% for the full year. Moreover, due to a lower than expected corporate tax rate in the first half, primarily due to the utilization of tax loss carryforwards, our net income has surpassed the initial forecast even further. This slide illustrates our quarterly performance trends. In the second quarter, we maintained high growth rates, with revenue increasing by 55% and gross profit by 50% year-on-year. All our business segments are showing steady growth, and I'll provide more details on this later in the presentation. Looking at our performance by region, we're seeing growth across all areas. In Japan and Korea, gross profit grew by 27% year-on-year, with stable growth primarily in the marketing and e-commerce sectors. From the first quarter of this fiscal year, we've also started to see contributions from Korean clients. Southeast Asia showed remarkably high growth at 92%. This was driven by revenue growth in our expanding D2C EC business and the acquisition of global creators in our creator growth support business, which is primarily recorded under the Southeast Asia segment. The Greater China and India region also demonstrated stable growth of 27%, primarily driven by the expansion of our marketing business. We believe this demonstrates our continued success in achieving global revenue diversification and sustainable growth. For the second quarter of 2024, operating profit increased by 445 million yen year-on-year to 615 million yen. Similarly, adjusted EBITDA improved, reaching 978 million yen for the second quarter. While our SG&A expenses have increased in line with business expansion, our overall profitability has improved. In the second quarter of 2024, SG&A expenses as a percentage of gross profit decreased significantly to 86% compared to the same period last year. We aim to continue building a more productive structure as we grow. An important indicator of our improving profitability is the trend in gross profit per employee, which we've presented here. We're currently in a phase of putting our resource in existing countries and business areas. This approach allows us to gradually improve productivity and achieve efficient business expansion. As a result, we're seeing a steady improvement in gross profit per employee. We recognize the continued improvement of this metric as crucial going forward. At the same time, our recruitment efforts are progressing well, allowing us to expand our business scale in parallel with productivity improvements. Regarding our balance sheet situation, until the previous fiscal year, we had minimal borrowings. However, in the first quarter of 2024, we secured 3 billion yen in interest-bearing debt from major banks to enhance our cash position. Also, while we've been actively pursuing M&A, we've maintained a disciplined approach. As a result of 9 M&A transactions, our goodwill stands at 2.9 billion yen, with a healthy goodwill to net assets ratio of 0.19%. Moving forward, we'll continue to balance maintaining liquidity with pursuing investment opportunities, appropriately utilizing interest-bearing debt when necessary. Our policy is to maintain financial soundness while realizing medium to long-term enhancement of corporate value. Based on our strong performance in the first half of 2024, we've revised our full-year consolidated forecast upward as of today. This revision reflects overperformance in our partner growth business, as well as improved profit margins and a lower corporate tax rate. For the full year, we now expect revenue to reach 49.1 billion yen, up 47% year-on-year, and gross profit to hit 18.3 billion yen, a 44% increase. We're forecasting operating profit to surge 161% to 1.95 billion yen, with net income attributable to owners of the parent expected to reach 1.35 billion yen. Our first half results represent 46% progress rate of this revised full-year forecast for both revenue and gross profit, compared to 43% at the same point last year. For operating profit, we're already at 50% progress rate versus just 15% last year. Given the typical seasonality of our fourth quarter, we believe these revised projections are conservative. The changes of the key assumptions underlying the forecast from the initial forecast are highlighted in red. Based on the progress of each business segment in the first half, our new forecast assumes year-on-year growth rates in gross profit of 32% for our marketing business, 60% for our D2C EC business, and 58% for our partner growth business. We also expect our operating profit margin to improve from 2.2% last year to 4.0% this year. Regarding selling, general, and administrative expenses, personnel costs represent the largest component. However, we believe that as we expand, we won't need to increase our workforce at the same rate as our revenue growth. This should lead to a gradual improvement in profitability. While not included in our current forecast, M&A remains an important strategy for us. We're actively considering potential acquisitions if we find companies that are a good fit for our business. We have summarized our financial performance here, and as I've just explained, we're showing steady progress across the board. The details are consistent with what I've outlined so far. Now, let's move on to the next part of our presentation, where we'll dive into the detailed explanations for each of our business segments. Let me now explain the performance of each business segment. In the second quarter, all our businesses achieved year-on-year growth. On a gross profit basis, the marketing business grew by 26%, the D2C EC business by 71%, and the partner growth business by 83% compared to the same period last year. The group's consolidated gross profit margin stands at 37%, which is consistent with our historical trends. While all our business segments are growing, the partner growth and EC businesses are showing particularly high growth rates and are increasing their share of our overall business. In the second quarter, the composition of our gross profit was as follows. Marketing business accounted for 43%, D2C EC business for 18%, and partner growth business for 38%. As each of these businesses continues to grow, we believe we're in an increasingly strong position to leverage synergies between our different business segments. This interconnected growth is enhancing our ability to create value across our entire business portfolio. The marketing business achieved a 26% year-on-year growth in gross profit, maintaining stable growth in line with past trends. By region, Japan is leading the growth, primarily driven by influencer marketing. Other regions, including Thailand, Malaysia, and Taiwan, continue to show stable growth. Looking at revenue, the second quarter shows a slightly lower growth rate of 18% year-on-year. This is primarily due to several large clients shifted their budget to the second half of the year. On a global scale, we're not seeing any significant changes or concerns in the business environment. Now, let me explain about the type of clients for our marketing business. In the first half of 2024, our revenue composition was 30% from global brands, 42% from Japanese brands, and 28% from other local brands. By industry, cosmetics and beauty is a major category across all client types, but our revenue is well diversified across various industries. Other key categories include food and beverages and entertainment and media for global brands, travel and home appliances for Japanese brands, and telecommunications and consumer goods and services for Asian brands. We're also continuously enhancing our products. For our influencer marketing platform, AnyTag, we've released a feature that uses generative AI to recommend optimal influencers. This feature allows for more effective utilization of data from over 790,000 influencers. As a case study for our marketing business, I'd like to introduce our work with the Korean cosmetics company, Coolio. To expand awareness of Coolio's global brand, we utilized AnyTag to analyze the strengths of numerous influencers and select the most suitable ones based on data. We appointed Mukwena, a female group YouTuber managed by our group company Grove, as a brand ambassador and implemented a comprehensive marketing strategy, including performance verification. As a result, visitor traffic to the EC site from influencer posts increased significantly, leading to improved sales for the client. The client highly praised AnyMind's support, particularly our ability to manage all aspects of EC site sales and ad delivery in one place, as well as our strength in providing both influencer marketing solutions and creator management functions within the group. The D2C EC business has grown significantly, showing a 71% increase year-on-year. Our B2B EC business is steadily expanding, with Archie Company in Malaysia contributing to our performance from June in the second quarter, along with new customer acquisitions in Thailand, Singapore, and other regions. Regarding the gross profit margin of the D2C EC business, the overall level has decreased due to the inclusion of DDI, which we acquired through M&A. DDI operates on an inventory holding business model, partly due to Indonesian regulations, resulting in a lower gross margin. Excluding DDI, the gross profit margin for the second quarter was 61%, which is consistent with our historical trends. A key KPI in the EC domain, the number of brands we handle, continues to increase steadily. The number of brands we're managing has reached to 208 brands. This includes 9 brands handled by Archie, which were added in the second quarter. In our enterprise e-commerce support business, we're seeing an increase in cross-border and global major brand partnerships, with revenue per brand also growing. In our Creator D2C business, while revenue per brand is affected by seasonality, new product numbers, and price variations, it continues to show steady progress year-on-year. I'd like to introduce some case studies from our Creator D2C business. First, we've launched the apparel brand called Harajuku Mind, featuring our affiliated creator Takeshita Paradise, who has 1.58 million YouTube subscribers. We've also launched new apparel brands Orugu and School in collaboration with popular influencer and model. For these brands, we've held numerous pop-up events in Tokyo, Osaka, and other locations, creating both online and offline touchpoints with consumers. We're expanding these businesses through collaborations between our team members with apparel industry backgrounds and popular influencers. As an example of our enterprise e-commerce support business, I'd like to introduce our client, a well-established Korean cosmetics brand, Forenco's. We support Forenco's Japanese market entry from June 2024. By utilizing our global EC solution, we began providing all-around supports, from EC site construction and operation to logistics, customer support, and influencer marketing. Furthermore, we've secured an exclusive online sales contract in Japan, and also for their online sales operation in Vietnam, providing strong support for Forenco's growth in the Asian market. As a new solution in this area, we've launched AnyAI, an integrated data analysis platform designed with AI utilization in mind. This platform is integrated with our existing services, such as AnyX, AnyTag, and AnyChat, providing comprehensive data analysis and business improvement solutions. For instance, it offers functions for collecting and analyzing reviews from EC malls and social media, supporting brand companies in strategy formulation and business process development. Moreover, we've joined Google Cloud's generative AI partner ecosystem, enabling us to provide related data analysis solutions. Our partner growth business is also performing very well, showing an 83% increase year-on-year. The creator-oriented platform, in particular, is showing strong performance. In our creator growth support, we're steadily acquiring new creators globally. We've built a diverse support system tailored to creators' activities, including monetization support for TikTok and YouTube Shorts, as well as music distribution support. In publisher growth support, while there was a decline in revenue from related solutions due to changes in video advertising policies by major networks in the second quarter, we're steadily acquiring new publishers. We expect growth to resume from the second half of the year onwards, with the second quarter likely representing the bottom. Regarding our publisher platform AnyManager, we're seeing an increase in users, particularly among publishers operating mobile apps, and we've also acquired new contracts from Korea. While there are seasonal variations, revenue per publisher continues to show overall stability. We're continuously developing new solutions for the AnyManager platform. Recently, we launched a new feature that uses AI to automatically generate short videos. Also, in June 2024, our group company, Maiden Marketing, was certified as a Google Certified Publishing Partner in India, demonstrating our ongoing efforts to strengthen partnerships. For our creator-oriented platform, the number of contracted creators has continued to increase significantly in the second quarter, surpassing 2,600 globally, thanks to our efforts to acquire global creators. We're able to expand our new creator base globally because we can support creators multidimensionally, not just on YouTube, but also on YouTube Shorts, TikTok, and in acquiring sponsorships. While revenue per creator is an indicator that fluctuates greatly due to seasonality and other factors, we've achieved steady progress compared to the same period last year. As an example of our creator support, Caleb Andri, an Indonesian creator we support, has gained over 15 million subscribers on his YouTube channel and received the Diamond Creator Award. Mr. Andri highly appreciates our comprehensive support, including content idea provision, performance analysis, and introduction to brand collaborations. We've also launched a new AI-powered YouTube consulting service. We plan to use AI to analyze data and market trends to propose optimal projects and content. We aim to actively utilize AI technology to continuously enhance the value of our services. Finally, I'm pleased to report that our company has received the Judges Special Award at the Japan Startup Awards 2024. This award, organized by the Ministry of Economy, Trade and Industry, recognizes entrepreneurs and startup companies that have created impactful new businesses. The evaluation was based on criteria such as business novelty and innovation, global expansion, and solutions to social issues. We will continue to pursue innovation and aim for further growth. This concludes our financial results presentation for today. Thank you for your attention.